Welcome back to the Deep Dive. We're here to take those dense earnings calls and make them make sense. And today, we're tackling Solid Power, ticker SLDP. Specifically, their Q2 2025 earnings call from August 6th. This one definitely turned some heads.
Oh, absolutely. The market reaction afterwards was pretty explosive.
Right. So our mission today is to really unpack what operational wins and strategic moves fueled that, well, frankly, massive rally the day after.
Yeah, with a company like Solid Power still in that developmental stage, the price action tells a story. The numbers were okay, they were decent, but it was clearly the qualitative stuff that acted like jet fuel here.
Okay, so let's start with those numbers first. Give us a quick snapshot.
Sure. So total revenue and grant income landed at $7.5 million. That was quite a bit better than the street's expectation, which was around $6.5 million.
Okay, so solid beat there.
Yeah, and nearly 49% growth year over year. For a company basically still pre-commercial, that's, a good sign they're hitting milestones.
Right. But then there's the earnings per share, the EPS.
Yeah, right. The GAAP EPS was a loss, negative 13 cents per share. But importantly, that was pretty much exactly what analysts expected. So no real surprise on the bottom line loss itself.
Okay, so revenue beat, EPS in line. Normally, that doesn't send a stock soaring over 30%, does it? Especially on high volume.
Absolutely not. I mean, usually you'd see maybe a modest bump. That kind of aggressive move, it tells you investors suddenly saw a big reduction in the core technology risk.
So they're looking past the immediate loss.
Totally. They're focused on execution, especially when, and this is key, when that execution gets validated by a big partner. In this kind of deep tech space, hitting those tough milestones, that's way more important near term than the profit number.
Okay, let's dig into those milestones then. Maybe start with the financials, the money flow. How's their cash position looking?
Still pretty strong. They finished the quarter June 30th with about $279.8 million in total liquidity. That's cash, equivalents, securities. A good cushion.
But cushions don't last forever. What's the burn rate like? How fast are they spending that?
That's always the critical question for these pre-revenue battery companies, right? So year to date, through the first half of 2025, their total cash investment that includes operating outflow and capital expenditures was $45.7 million.
Okay. And how did that break down in Q2 specifically?
Well, Q2 operating expenses were $33.4 million. But here's the interesting part. Management specifically called out that $6.7 million of that was one-time costs.
One-time costs for what? Just random spending?
No, not at all. It was tied directly to supporting that SK On factory acceptance testing, the FAT.
Ah, so it was spending linked directly to hitting a partner milestone and recognizing that revenue beat.
Exactly. It shows discipline, tying costs to deliverables. Investors really like seeing that kind of productive spending, not just open-ended R&D burn.
Okay, so the money side seems under control, linked to progress. Now let's talk about the real excitement drivers, those operational wins, the outside validation. What was the headline news there?
I mean, the biggest one had to be the BMW i7 test vehicle.
Right, they mentioned that. What's the significance?
Huge significance. They confirmed this high-end BMW electric sedan is now actually using Solid Power's large format, all solid state battery cells.
So it's out of the lab and on the road.
Pretty much. It's massive OEM level validation. It proves the core cell tech is mature enough for a real demanding commercial type vehicle. It gets the technology past that initial, does this stuff even work question.
Okay, that's huge for validating the cell. What about validating the business model, the whole tech transfer piece? That's where SK On comes in, right?
Exactly. We know they finished the factory acceptance testing, the FAT. That's what drove the revenue beat we talked about.
Right.
But the next step, which they expect later this year, is site acceptance testing, SAT. And for you listening, understanding the difference between FAT and SAT is really crucial.
Okay, break it down. Why does SAT matter so much more?
Okay, so FAT, factory acceptance testing, that happens at Solid Power's facility. They build the pilot line equipment, they run it, they prove it can make the electrolyte to spec. They tick the boxes in their own controlled environment.
Got it.
Yeah.
Their home turf.
Right. SAT, site acceptance testing, that's the real acid test for their licensing model. That's when that pilot line equipment gets shipped out, reassembled, and validated on the partner's floor. At SK On's facilities in this case.
Ah, okay. So it proves the whole process can actually be transferred and run successfully by someone else.
Precisely. If they nail the SAT, it massively de-risks their whole strategy of scaling through IP licensing and material sales instead of building everything themselves.
Which leads us perfectly into their core strategy. Management kept talking about this electrolyte first or asset light approach.
They were very clear. The long-term plan is sell the special sulfide electrolyte material, license the cell designs, and avoid the massive capital cost of building their own gigafactories.
Okay, but let me push back on that a bit. Is that really less risky? Or are they just kind of outsourcing the manufacturing headache, the execution risk, to partners like SK On? What if SK On struggles to get the license line running at scale?
That's a totally fair point. It's definitely a trade-off. They are outsourcing the volume manufacturing risk, no doubt. But look at the flip side.
Okay.
By focusing just on the high-margin electrolyte in the IP, they need way less capital up front. And potentially, their market is much bigger. They could eventually sell electrolyte to competitors of BMW and SK On, right?
True. So potentially higher margins, lower capex, wider market.
If it works, yeah. The big risk for them shifts from like financial bleed out to technical scalability. Can they actually produce enough of this special electrolyte consistently?
Which is where their own capacity expansion comes in.
Exactly. They confirmed they're on track for commissioning what they call SP2, their continuous manufacturing pilot line for the sulfide electrolyte, sometime in 2026.
And that involves ordering equipment long in advance, detailed design work.
Right. And they said that's all underway or completed. And SP2 isn't just a small step up. It's expected to boost their annual electrolyte capacity from about 30 metric tons now up to roughly 75 metric tons.
That's a decent jump.
It is. And another little validator they mentioned getting $3.3 million in reimbursements from the Department of Energy specifically for this SP2 project. More external validation for their scale-up plan.
And while they're building that bigger capacity, they're already sending out samples.
Yeah, through what they call the EIC, the Electrolyte Industrial Center. Think of it as their commercial outreach hub. They're sending samples to current partners, yes, but also to new potential strategic customers.
So building the pipeline for that electrolyte-first model?
That's the idea. They need multiple customers lined up eventually to make that asset-light strategy really pay off.
Okay, let's shift gears a bit. Let's talk investor context. We've got strong execution, partner validation, but that 30% rally, what message is the market sending with that kind of move?
I mean, it's pretty unambiguous. The market is saying loud and clear, we care more about you proving the tech works and can be transferred now than we care about near-term losses.
Classic developmental tech behavior.
Absolutely. The big value unlock happens when the main risk shifts from, will this technology ever work, to, okay, it works. Now can the partners actually manufacture it consistently? The BMW news and the SK On FAT, those were huge proof points moving the needle away from that first question.
And how does Solid Power's performance look compared to, say, the broader battery sector?
It's night and day, really. Over the last year, SLDP is up, 200% plus? Maybe more? While general battery and EV material ETX, like LIT, for example, they've been basically flat or even down over that same stretch.
So definite outperformance. Why?
Because they're hitting these very specific company-unique technical milestones that the rest of the supply chain maybe isn't or can't. But, we have to add the caution here.
Always.
Sustaining this kind of positive sentiment absolutely depends on them continuing to execute transparently. Against all the technical and manufacturing hurdles still ahead, going from 75 tons to mass production scale, that's complex. And they need to keep managing cash carefully given the investment still required.
Okay, so focusing on that execution. If partner validation is what the market craves, the very next big test is that SK on-site acceptance testing, the SAT, later this year.
Correct. That's the next major checkpoint.
Which brings us neatly to our favorite segment. This is not financial advice. Time to spin an outrageous but plausible trade idea around that catalyst.
All right. So the SAT, it feels like a pretty clear, almost binary event for investors, right? Management proved they could do FAT. Now everyone's waiting for that final validation of the tech transfer itself.
Okay, so how do you play that potential pop?
Well, given that management has shown they can hit these partner-verified milestones, you could argue the SAT success is maybe a higher probability event than the market fully prices in right now. If it hits, could we see another gap up after Q2 earnings?
Plausible, yes. So the trade idea.
Okay, again, not financial advice, but one idea could be to take a swing at some slightly out-of-the-money call options expiring maybe around year-end, or perhaps structure something like a bullish calendar spread, sell a near-term option, buy a longer-dated one, like December or January.
What's the thinking there?
Simple, really. If SAT gets confirmed, it should significantly cut the perceived manufacturing risk, right? It validates the whole IP licensing model. That could easily trigger another substantial re-rating by the market. So you structure a position to capture that specific event-driven potential upside.
Yeah, that structure definitely targets the technology transfer success.
A confirmed SAT isn't just an update. It's like the ultimate proof point for their core business model, licensing the process, selling the essential electrolyte.
Okay, so let's wrap this up. Final thoughts on Solid Power's Q2.
I think it was a really defining quarter for them. You had the revenue beat driven by that SK On FAT. You had invaluable real-world validation with the BMW i7. Concrete progress on technology transfer. The market clearly rewarded that execution. Now, the focus is squarely on scaling up that electrolyte capacity and proving the licensing model works with SAT.
So the big question for you, the listener, to keep mulling over is this. They're clearly aiming to be an electrolyte supplier and IP licensor. Can they actually make that leap? Can they turn these impressive R&D and technical wins into profitable, scalable material sales across multiple partners before that cash cushion runs low and they need to raise more money?
That transition from R&D powerhouse to sustainable materials business, that's the key dynamic to watch over the next, say, 18 months.
Absolutely. We'll be watching closely. Thanks for tuning in to The Deep Dive.